Hello guys, Kenya Horton here, and in this video I am super excited to talk to you guys about moving averages, what they are, how to use them, and in the next video I'm going to show you how to set it up on your MetaTrader 4 and show you how I use them. Now a lot of traders use their own favorite moving averages. There's no one moving average that's better than another. It really comes down to your preference, whether you're a swing trader, a scalper. I am a scalper and I do use the moving averages on the lower time frame, so I use them on the 5-minute chart. I do like the 1 hour as well. However, I don't like holding trades for a long term, but I do like looking to the longer time frames to get a bigger picture of what's going on and to see how the market is trending. So let's go ahead and talk about moving averages. You can pause this video, take notes. I do want to say that if you have comments, or you have questions, you can drop them in the comment section of this video and I'll do my best to answer them. A lot of our team members have asked, when are you going to share the moving averages and what you're doing? Did you record something yet? And so finally I'm getting around to it, and here you go. So I hope you guys enjoy this. If you're not trading with us and you have a desire to, feel free to reach out. We are more than happy to help you. So let's go ahead and talk about moving averages, guys. You've probably heard of it before, maybe not. If you have not, don't worry. We are all learning together. If you're doing research on this, obviously you're learning, and so kudos to you. But moving averages basically is used to identify trends and confirm reversals in the market. So as I was telling you, I'm more of a scalper, and I use a strategy right now that helps me get about 3 to 5 pips almost guaranteed. Seriously, I have very little loss with my scalping method, and I like the moving averages because since I've learned it, I've been able to aim for about 10 to 30 pips. Sometimes I can get a little bit more, but I don't get greedy. I just like getting my 10 to 30 and get out the market. So I scalp the 5-minute chart with the moving averages. And basically what you're looking at is a 9 simple moving average on this chart and an 18 simple moving average. The white line is a 9 simple moving average, and also the purple line is an 18 simple moving average. Now, basically, when price is below the moving average, it's considered a downtrend. When price is above the moving average, it's considered an uptrend. Now, there's different ways that you can identify a trend. Like I said, I like to look to the higher time frames, and there's different things you want to look for, swing highs and swing lows. You can do more research on this. Like I said, this is not going to be very, very in-depth, but I just want to talk to you in basic terms of what this is and, how to use it. There's different types of moving averages you're going to hear about, but basically, as you can see, every time you have 2 moving averages cross, when a shorter period moving average crosses over a faster period moving average, it can signal that the trend is changing directions to the upside or vice versa, okay? As you can see here, that's exactly what happened. There's also something called fake outs, which are false signals that you want to be on the lookout for. You don't want to open any, pending positions if there is not a gap between the candle and the crossover. So I look for big gaps, and I'm going to show you what that looks like on my MetaTrader 4. Okay, but that basically in a nutshell is moving averages, and they rely on price action that's already taken place for their calculations. So major moving averages that most traders use are the 10, the 20, the 50, and also the 200 moving average, all right? The shorter the time frame used to calculate the moving average, the more closely it's going to follow the price pattern. So as you can see, the 9 moving average, like I have a 200 moving average on my MT4, my MetaTrader 4, and it basically defines the direction of the trend for me, tells me if, price is moving in an uptrend or a downtrend, but the smaller the moving average, it's going to follow the price pattern a little bit tighter. That's what you're going to notice. So, for example, if you're looking at a 50-week moving average, so if you pull up your phone or your computer, and if you go to any pair and you look at a 50-week moving average on a weekly chart, for example, it's average to draw the last 50 closing prices on a 60-minute chart, for example. So if you pull up a 60-minute chart and if you have like a 50 moving average, it basically takes it averages the 50 closing prices of the last 50 hourly candlesticks. And let's say if we were looking at a 5-minute chart, like if this was a 5-minute chart, And let's say, for example, we have the 9 moving average. It forms the last 9 closing prices of each 5-minute candle, okay, averaged and so forth. So that's basically what it does for you. And I love it because the moving averages are so consistent and reliable. Now, the 3 types of moving averages that you're going to hear about, there's no one moving average that's better than another, all right? Traders use their own based on their preferences and how they're trading. Basically, you're going to hear about a simple moving average, a weighted, and an exponential. Now, a simple, like I said, like the 9 is a simple moving average. The lower the period, it's going to hug the price pattern a little more tighter, all right? And so you see that with the 9 simple moving average. Now with a weighted moving average, it gives more weight to recent periods and more emphasis on what traders are doing at the moment in the market. I don't use a weighting moving average, but I do use an exponential moving average, and I'll show you what that looks like on my MetaTrader 4. But an exponential moving average, you can write this down or you can do more research. It responds faster to price action by distributing more weight to recent periods. So those are the main 3 that you're going to hear about, okay? And your entry is basically I'm going to show you what my entry looks like, but I look for a gap between the candle and the moving averages. I look for a gap. If there's no gap, and I'll show you, for example, like see here where it says non-trending, there's different areas where you just do not want to enter. And I'm going to show you a better example of this, but you'll see here, you have a few where it was really tight. There's no trend. It's pretty much like in a range, a short range. You don't want to enter into the market when you see this. But if you have a nice little gap in between your moving averages and the price action, then that you definitely want to look for a signal to go long or go short. Now, where would you get in? So let's see if I can take you to, I'm going to stop share on this, and then I'm going to go over with you a few trades that I got into last week, I believe, and show you exactly what you will look for, okay? So what you're looking at right here is a 5-minute chart of CHF JPY. And on here, I use a 200 moving average, simple moving average, which is the blue line. And then my 50 moving average my 50 simple moving average is the purple line. And my 8 exponential moving average is the yellow line, which hugs price pattern very tightly, as you can see. So like I said, you want to look for gaps, okay? So you want to look for a nice gap. Now, as soon as the moving averages cross, you don't want to enter right away because you could have a fake out, which is a false signal, and that can happen, okay? So what I like to do is wait till about maybe the 3rd candle or so, the 2nd or 3rd candle after it crosses. But in this example, I got in right around here at 110.68, so that was my entry, and my take profit was 110.82. So longer than what I normally would go for. Well, no, not really, because like I told you, I like to aim for about 10 to 30 pips, so that actually was not bad, right on point. So this was a nice little profit, and then I usually drop my stop loss right below my 50 period moving average. I usually put it about preferably 5 to about 8 pips below my 50 moving average, and it has worked very, very effective for me. So I don't mind getting stopped out if I do, because the reward compared to the risk, like I said, it's great, as you can see. So I'm risking very little for a bigger reward. All right, so that's one example there. Another thing that I do is I use the RSI, and you can see my settings here. My RSI is 7 and close. I use levels 80 and 20. And I like to use this because I drop a 50 level on my RSI as well. I'm going to show you that in the next video. But basically, when your RSI, and I have a money flow indicator on here as well, moving with the RSI, and you want the money flow and your RSI moving in the same direction. So when price went long here, you can see that your money flow and your RSI was way above 50. If it's way above 50, that means that the strength is with the buyers, I'm sorry. And when it's below 50, that means that the strength is with the sellers, all right? So I like it because it's very effective. As you can see the movement of price action, you'll see that my indicators follow consequently, and that's what you want. You want everything moving together. If not, then that could be a signal of, you know, pullback or some changes in direction of price, and those are things that you want to be aware of. Now, this is what you want to avoid. So as you can see, you have where your two moving averages cross. You can see the yellow and the purple, all right? But see how tight it is? If there's no gap, you definitely do not want to enter. This is what you want to avoid because these could be false signals. And also too, it could, you know, be that price is ranging and there's just not a lot going on. I like to trade this strategy during the London session and the New York session. So you can figure out which session would be better for you. But like I said, it's very effective, it's very simple, and that's why I like it. And while you're learning how to become a world-class trader and really perfect your trading, this is something that I feel is very reliable that can help you gain some consistent pips on top of what you're already doing if you'd like. Like I said, demo it, but this is what you want to avoid. You don't want to have the moving averages very, very close together. You want to wait until you clearly see a trend on the higher time frame, and then on the lower time frame, you definitely have nice gaps in between price action and also your moving averages. Here's another setup. This is another trade that I was in. Oh, actually, I think this is CHFJPY again, but I think this is another or a different entry maybe. Let's see. Maybe not. I think this was, wait, 823. Oh yeah, okay. So I think this was another entry, another position that I had. But anyway, so this one is where price is going short. So as you can see, the entry was right around 111.04. So if you had got in there, you basically, and as you can see, there's a nice gap here, right? So you wait, let a few candles form, and once you have your, you can get on about the second or third candle, fourth candle if you want, and you basically will wait until a price reversal. So for example, as you can see, like this candle here, where price had pretty much pulled back to the moving average, that's where you want to get in. You don't want to get in here at the bottom of the candle. You want to get in closer to the moving average line, okay? So if you would have got in there, basically you could have taken profit here at 110.80, all right, for a nice 84 pips, and that is a beautiful thing. So that's why I love the moving averages, and like I said, I always drop my stop loss about 5 to 8 pips above or below my 50 moving average, which is the purple line there. So guys, that pretty much is it. That is the moving average strategy that I've been using. Like I said, I absolutely love it. It's been very consistent and reliable. I demoed it for weeks. I journaled every single entry and just kind of noted things, and you can perfect it. You might, you know, you might add some things that you like, and you can definitely perfect it. But I hope that you find this helpful. If you guys have questions, like I said, drop them on this video and I'll be happy to answer them. May the pips be with you guys. Have an awesome trading week, whatever day it is, and I will see you in the next training.